communities on Telegram, either World Miner Global and World Miner Brazil, with together more than 30,000 active members in total. So how do you understand the cryptocurrency market cycles? Right now, while you listen to this transmission live, let's make a quick exercise. Imagine that we are at the end of 2022, when OpenAI launched its revolutionary chat GPT, and the main cryptocurrencies has just hit their all-time high and showing no signs of slowing down. Some crypto coins had 10 times X, or you happen to be holding a substantial amount of one or more of these crypto coins. The highest peak is clearly in sight, and now that we are so close to it, we start to realize that we never took the time to seriously think about the most important question in cryptocurrency investing. When should we sell? Perhaps you fly past the moon and you panic as you find yourself washed it in shock as all your gains get burned up of the FUD. Well, in this session, we will focus on a few metrics you can use to help you plan your own ultimate crypto coin exit strategy, regardless what crypto coin you're holding. To build a bulletproof exit strategy is crucial to first understand the assets you're dealing with. This understanding starts with putting everything into context. So, the diversity of financial markets around the world. The world economy consists of multiple financial markets, such as housing markets, foreign exchange market, stock markets, and thousands of others. Almost all of these markets follow some kind of visible cycle. It can be a 1-year cycle, 4-year cycle, or even a 12-year cycle. In some cases, this longer cycle contain even smaller cycle that last a few months or even just a few weeks. But these cycles can also change over time, usually becoming longer as a given market matures. The cryptocurrency market is a very young, and it makes it very volatile. This is simply because it operates 24/7 around the globe on hundreds of different crypto exchanges. So this is simple because nobody knows exactly for sure what the actual value of the market is. And older, more established investors hold much of the wealth in financial markets worldwide. These investors are generally more conservative and less prone to taking risk with their investments, especially when it comes to a new market which consists of technologies they do not understand. So, a previous summary, what we talked about. At World Miner, to understand the cryptocurrency market, like traditional market, experience cyclical patterns of different price moments. These cycles are characterized by periods of rapid growth, also known as bull markets, you often hear on the financial news, and significant declines known as bear markets. Like when a country goes into recession, normally it affects all the stocks on a traditional stock market. So understanding these cycles is crucial for investors as they can help shape their investment strategies and manage the risk. That is very important. The 4 distinct and useful phases of a crypto market cycles are accumulation. The phase is characterized by low prices and low trading volume. Early adopters and investors, they accumulate cryptocurrency at a very low cost, like when Bitcoin was introduced in 2009. I mean, you used Bitcoins maybe a few years later to buy a pizza with. Today, you buy a car or a boat with 1 Bitcoin. Uptrend. As more investors enter into the market, demand increases, driving prices higher, like the property market here in Dubai, for example. This phase is marked by increasing trading volume and positive sentiment. Distribution. As prices reach their peak, some investors begin to sell their holdings, taking profit. This phase is characterized by a gradual decline in price and decrease in trading volume. Then we have downtrend. The market experiences a significant decline in price, often driven by fear and panic selling. This phase is marked by low trading volume and negative sentiment. The duration of each phase can vary, but the overall cycle typically lasts several years. It is important to note that these cycles are not always predictable, and there are so many factors that can influence their timing and severity. These stages are very similar to other related sectors, such as real estate economy and traditional finance. But understanding this cycle can help investors make informed decisions about when to buy, sell, or hold cryptocurrencies. It is crucial to remember that investing in cryptocurrencies carries a significant risk, and investors should always conduct thorough research and consult with a financial advisor before making any investment decision, period. An important remark. Cryptocurrency markets are not restricted to suit and tie traders. All you need to participate is an internet connection. That means a lot of inexperienced investors. This makes the cryptocurrency market even more volatile and irrational on a day-to-day basis. Because maybe we heard something from a friend, they made a fortune in Bitcoin, so why shouldn't I jump into this? And specifically about digital mining now, with a cutting-edge world miner platform, equipment and electricity won't be a concern anymore. For anyone who wants to be part of the mining and staking markets. Despite all the daily moments in crypto market, when we step back, we can see pretty clear market cycles. This cycle seems to last 4 years and consists of 2 or 3 year bull market, followed by 1 or 2 year bear market, depending on the market and how you draw your indicators. The crypto market cycle seems to be caused by cryptocurrency halving. The block rewards for miner are cut in almost half every 4 years. That assuming that the demand stays the same or there is a sudden decrease in supply that eventually leads to a spike in cryptocurrency prices and many other factors. So value and price placing. Since most crypto coins are highly correlated to main cryptocurrency, as you can see, when Bitcoin goes up, most other cryptocurrency follows. When Bitcoin goes down, you also see a sell-off in other cryptocurrencies because it's a market leader and most people follow the market leaders. They see also a massive swing to the upside around the time. This explosion in value makes it to the media, which brings even more money from both experienced and inexperienced investors into cryptocurrency markets. The most recent halving took place in May of 2023, leading many to believe that we are on the heels of another big move in the crypto market. Some would say we are already in it. In contrast to the 2 previous cycles, there is more smart money from financial institutions and experienced retail investors in the crypto space than ever before. And you can see that in the ETFs and others, big funds now investing in cryptocurrencies. This is in part due to governmental regulators around the world who have started doing their homework and realized there is much more to cryptocurrency than Twitter hacks or ransomware attacks. And the cryptocurrency market currently consists of anywhere between 7,600 to over 8,200 different coins and tokens. The total market cap of all these assets combined currently stands around $500 billion. To view an up-to-date global chart for the cryptocurrency market capitalization, you should visit our website, worldminer.io, where we keep you informed with news and numbers from the crypto and token world, or you can utilize CoinMarketCap as well. That has a lot of good information regarding this. So we can say that the main cryptocurrencies take the largest share of this with a market cap of around slightly less than $500 billion as of the beginning of 2021. As such, the cryptocurrency market is quite small compared to other financial markets. And for some similar assets, such as gold, for context, the foreign exchange market is worth roughly $6.6 trillion. So while the market cap of gold currently stands around $9 trillion, many have interpreted this contrast in markets to be proof that the cryptocurrency market still has a lot of room to grow. Now, when we have these solid graphs of cryptocurrency markets, let's take a closer look at the individual and his assets inside of it. As we all know, every cryptocurrency is consequently referred to as a crypto coin. It's a digital asset that can be part of a transaction, promotion, and reward, just like the ones WorldMiner offered to the digital miners and stakers. Nowadays, WorldCoin by OpenAI begins its global transformation, and all this market landscape will be renewed. Specifically, and thank you for a special partnership, at WorldMiner and its growing community of digital miners and stakers. The likelihood that the market cap of any crypto coin will be larger than the major cryptocurrencies anytime soon is very low, even during the next bull run. It's for just one simple reason. The most cryptocurrency, including Bitcoin, is where the most of the smart money from institutional investors and experienced retail investor is going. You won't see huge companies buying the dips on crypto coins anytime soon. Compared to diverse crypto assets, cryptocurrency is much less volatile, and its volatility has been gradually decreasing over the years. What's more is that the price action has a significant influence on crypto coins. When main cryptocurrency goes up, crypto coins goes up. If the main cryptocurrency up too quickly, many crypto coins tend to see losses in short term, especially when it's profit taking from these caps or smaller caps. Why? Because most of this money invested in crypto coins is coming from crypto rocketeers who are looking for the quickest path to the moon. Meaning that there is a lot of traders and a lot of profit taking off the table in this instance. And the arrival, for example, of OpenAI's WorldCoin and its official digital asset and WorldMiner main partner will make mining, staking, and crypto trading so much easier. So the dynamics and correlations of markets, it's very important in the same relations, because to understand, when we see that the main cryptocurrency taking off, many of us ditch our crypto coins and rush to the main cryptocurrency spaceship. And when main cryptocurrency loses steam and the price drops, everything comes crashing down to earth, meaning that you see these big jumps or dips. And it happens very quickly, and it happens 24/7. So crypto coins tend to see their best gains when most popular cryptocurrencies are gradually increasing in price, like Bitcoin or ETH, and when it's trading sideways. This is partly because of opportunistic investors gets bored with the price action from main cryptocurrency and the other large crypto coins and start inching closer and closer to the deeper and more chaotic waters of what lies beyond the top 10 or 20 crypto coins. So these dynamics between cryptocurrency and crypto coins are absolutely critical to understand because your ultimate crypto coin exit strategy starts with awareness that they will be heavily influenced by what the main cryptocurrency is doing. So remember this, it's important. The upper limit where your crypto coin can go is effectively set by diverse cryptocurrency own market cap. While it's true that the cryptocurrency market cap will be likely to continue to grow as the bull market marches on, planning to sell your, for example, XRP when it's $1,000 is not a realistic exit strategy because that will give XRP a market cap of over $50 trillion. That is more than double the size of the US economy. So it's very important when you invest in different coins or others that you see exactly what is the market cap of these coins, what are the total value or total distribution of these coins or tokens, so you can get a realistic sense how when you enter into a transaction with these coins and when you want to exit. Important. So now when you have a sense of how many cryptocurrency price actions seems to be influenced the crypto coins, and also hopefully come to the realization that the market cap of your favorite coin is probably not going to be larger than the main cryptocurrencies anytime soon, it's the next step into the factor of tokenomics. So tokenomics and investing. If the US dollar was a cryptocurrency, it would have some of the worst tokenomics in the crypto space. It has an inflation rate of around 3% per year. It has no supply cap and can be created at will by a centralized authority, like the US Mint, the Federal Reserve. Most of its circulating supply is held by a very small amount of people. This makes it a very poor choice as a long-term investment, and this has prompted one of the largest collective exit plans in financial history called the cryptocurrency. But it's quite amazing that almost every single crypto coin has its own unique tokenomics, including WorldMiner and its SAN, WM, and ATM. This sort of transparency is refreshing as it's quite rare in the legacy finance. Because do we know how many US bills are in circulations globally today? Who knows? When there is a short supply, the US Federal Reserve prints some more. However, it also shows us that the cryptocurrency space is not immune to the same sort of corruption and greed found in our current monetary system. Because greed you will find everywhere. I lost count on the number of times I came across a crypto project that was promising in every way only to be let down by its tokenomics. So many cryptocurrencies have solid development teams with functioning products and platforms that has been clearly defined and valuable use cases. Even boost partnerships with numerous international recognized institutions. So what is a typical day for a crypto and token market? Nowadays, numerous of international recognized institutions. Then you open the Block Explorer and it's worse than going through whatever you could ever wish for. So we are going to cover the key tokenomic factors that you need to keep in mind when it comes to plan your ultimate crypto coin exit strategy. Okay, let's go. The first is the token allocation. Every cryptocurrency has its own unique token allocation, and it cannot be changed after it has been set and minted due to blockchain technology. And select a few had no token allocation. Instead, a genius block was mined by one or more parties at the beginning without any sort of special token distribution. This is known as the fair launch. However, most cryptocurrencies we see today have something called a pre-mine, and that usually involves allocating a fixed amount of the initial or total supply of a token to select parties or causes. Some of these tokens goes to the founders, other goes to early investors of the project, and usually the largest chunks go towards the ICO and mining or staking reward for those who wants to participate in this cryptocurrencies ecosystem. So, assuming this downward trend in the main cryptocurrencies dominant continue, we must just see another drop in the next coming years in the cryptocurrency dominance. If that happens, it will again bring a flood of money into the crypto coin space and take many alts to a new all-time high. Because all cycles repeats itself in history, and obviously it will have different parameters, but it will repeat because it always does. Historically, big drops in specific cryptocurrency dominance has lasted around 1 or 2 weeks, meaning you would have plenty of time to exit during that window if that's part of your ultimate crypto coin exit strategy. Remember, entering into trading, mining, and others, you set your parameters and your goals and your objectives. And it's very important to follow these steps. If your emotion takes over, you are in danger, for sure. You can be lucky, but 99 times out of 100, you will not be that lucky. The second technical indicator to keep in mind is your crypto coin's value against the main cryptocurrency, the paradigm set by BTC. Most of us are focused on the dollar value of our favorite crypto coin and prefer to trade against a stable coin like USDT. While this makes it easier to keep track of our portfolios, it actually is the value of your crypto coin is units that gives you the best indication whatever your cryptocurrency is rising in value relative to other assets in the crypto space. So bear that in mind. Again, the time frame you use to analyze this trend might influence whatever is going to go for an upside or a downside. But keeping a close eye on a specific cryptocurrency dominance and your crypto coins trend against the main crypto coins and platform will assist and help you to figure out when is the best time to sell. So how to profit on these scenarios? Well, the main and the most popular cryptocurrencies had a dominance that saw sharp drops and money was flooding into the crypto coins. Price looks bearish now, and all indicators suggest we're headed for a huge correction across the board. Should we sell? Well, we better do than stay on holding, because my friend will dump within a week and the price will get even lower. As we can see here, it takes some research, a bit of strategy, and a lots of luck. So how about going to invest in WorldMiner right now? Well, check out one of the many ways you can participate and profit with WorldMiner's platform. That is utilizing a dual coin mining method. And this is important because we create another economy doing this dual coin mining method. In this mode, you will see the world miner tokens to mint and create ATM mining products. The necessary coin in this whole tokenomics is the WM token. It's utilized for the reward as well. At the moment, the daily reward rate is of 1%, and the distribution time is, and listen to this, real-time liquidation, meaning that every 24-hour set is liquidated into your account. In the dual coin mining modality, in the initial start, is unlimited, and the period staking is of 10 days. And the daily reward of 1% makes it more attractive to miners and stakers, while the ATM mining products supports the investment into the world miner coins and yield ATM coins. This also makes the ATM coins can be traded freely on the secondary markets. So in the dual coin mining program with World Miner, operating on the OpenAI platform, we are then doing a new dual coin mining with WorldCoin, and in the end, our ATM coin. So for more information about this, please visit worldminer.io, become part of our community, and reach out to our Telegram groups, World Miner Global or World Miner Brazil if you are in Latin America or speaks Portuguese, and take the next step into become a miner. Thank you so much for participating here today. And I believe Cesar has some questions. Let's see what they are. Thank you.
Thank you, Ola, for your wonderful explanation. And thanks to everyone participating today with great participation. We have some request by Patricia, which has already been answered on Telegram. She wants some explanation about the cycles you mentioned. Then, Ola, we have a question from Laura. How do external factors like regulatory news or technological advancement influence cryptocurrency market cycles? You kind of answered it during your presentation. Well, I guess you can reinforce a little bit.
Yeah, it's so many sentiments, specifically in the cryptocurrency space, that is affected on a daily basis. So, for example, when we had, just to take Donald Trump, he was participating in a crypto event in the US for, I think it was in Nashville, not so sure, or in Oklahoma, a few weeks back. And if he will become president, he announced, I will make and declare that cryptocurrency will be part of the ongoing government and open up much more than today's government that is run by Biden, that is restricting or trying to stop crypto in the US. That is not true in one sense, but when that kind of statement happens, or when, for example, the US stock market and globally, because everybody had all trading in normal stock market, has priced in certain kind of factors. In this case, they believed that the central bank in the US or any other bank around the world would actually lower or increase their interest rates on lending, specifically if we say what happened in Japan, where the government, they thought for sure they were going to do this action, and they do either a bigger action than the sentiment is in the market, like what is built in the price range already. If it's out of that range, immediately it will affect every market, financial markets around the globe, because it was very popular, for example, to loan money in Japan to utilize this money in other markets because it was cheap and very cheap to borrow, because they borrowed it in yen against the US dollar, and it was a very low interest rate, for example, and the yen was always appreciated against the US dollar, meaning it was losing value. So for repaying the loans, it was very cheap for US companies, for example. But then suddenly last week or the week before, the Japanese central bank said, no, we're going to go the opposite way, and we're going to change on a much higher interest rate. So suddenly all that money that has been loaned was costing a lot more money for them, meaning that they were panic selling. And suddenly you saw this happening around the world for 2-3 days. Everything was going red on US stock market, on European stock market, on Japanese stock market, and the same for the cryptocurrency market. Because when somebody needs to call in their loans on, for example, the stock markets against buying bonds, treasuries, or shares, same will happen in the cryptocurrency space, because you can borrow as well and leverage on future trading in the cryptocurrency space as well, meaning that suddenly the exchanges will call in on your futures trading because they went below a specific threshold. And that makes, again, price market drop even more, means that you're going to get more panic selling, and then you're going to see the big whales coming in and buying on the dips, because they can actually move the markets because smart money is now suddenly moving again. So everything actually was going around the world in any kind of political statement, war, financials in one country will affect globally everything. And specifically in the cryptocurrency space as well, because sentiment still, because it's such a young market, will give you that hikes and dips very quickly. And you can see that because it's traded 24/7. So you can always jump in and do your trade on local stock markets, like say the US NASDAQ, for example. They have actually barriers, meaning that if a share drops more than 10%, 15%, they will actually put a pause on trading to investigate what's going on before they open it up again. So you are more on a traditional stock market secured in this way. And that doesn't happen in the crypto space, because your token or coin is traded on hundreds or even 1,000 different crypto exchanges around the world 24/7. Maybe that answered the question.
I believe so, Ola. And Laura has another question that you already answered, which is, what role do investor sentiment and market psychology play in shaping the cycles of cryptocurrency market? Well, you kind of answered that as well. And because online ladies today are leading the discussion here, we have another one from Patricia. She asked, how can historical price data be used to identify patterns or trends in cryptocurrency market cycles?
Yeah, so if you look at the trends and going back in history and seeing every time what has happened before a bull run, for example, in Bitcoins and so on. So these indicators, it doesn't matter if it's cryptocurrency, if it's stocks, whatever it is, they are actually because math is never lies. And if the math is correct, it will never lie. Meaning looking at these charts is very important. It can be from 100-day cycles, 200-day cycles, depending on what you're trading and in what kind of cryptocurrency and the cycles. Historically, when you see these trends, they will repeat themselves again. You see that in every financial indicators, in every market, in the stock market, housing markets, etc., etc.
Thank you so much. We just listened to Mr. Ola Lind, CEO at WarMiner, with an explanation today about cryptocurrencies market cycles. We will hope to meet you again tomorrow for another session in which we will speak. Once again, we will discuss different important subjects of our crypto mining and staking world. And for you who know how to speak Portuguese or are located in Portugal, Brazil, or some other Portuguese-speaking countries, we will have another session today later at 9 p.m. Dubai time, 9 p.m. Dubai time, a session in Portuguese about the methods for mining in the Web3 era. So thank you so much, Ola. This is Cesar Antonio Martin, waiting to see you again in our next sessions by Born Miner Online.
Thank you so much, and thank you, everybody. Have a good day.